the cycle that starts in 2024, you can't stop that. It's coming. January 1st, 2024 is coming. And the next 4 years are going to be a truly parabolic, exponential increase in technology adoption, application development. And you go back and just look at all the precedents. Go back and look at 54 to 58. Go back and look at 68 to 72. Go back and look at 82 to 86. Go back and look at 96 to 2000. Go back and look at 2010 to 14. There's nothing you can do to stop it. I remember when social local mobile came out, Solo Mo, and it was like, social media, we don't need that. That's stupid. Billions and billions and billions of dollars. It's just that beginning of the cycle. It's literally just beginning. And that doesn't mean it's up only. It doesn't mean that we won't have a bust in 2028. We will. But from those ashes, where the bad ideas get flushed, we will then generate, I really believe this, I think we're going to generate $15 trillion of value. And it's awesome.
Welcome back to Money 101. In this presentation, drawing inspiration from Mark Yusko's insights, our focus extends beyond the immediate future to encompass a more expansive outlook, examining historical cycles ranging from the tech boom in the 50s to the recent surge in blockchain technology. A discernible pattern emerges: rapid growth, subsequent market corrections, and then a robust resurgence. What distinguishes the forthcoming 2024 cycle? We're stepping into an era where technology transcends being merely an industry sector. It becomes the essential foundation across all sectors. With advancements such as the Internet of Things and AI-driven analytics, the forthcoming wave of technological progress is poised to reshape our interactions with cryptocurrencies and blockchain fundamentally. If you find the convergence of technology and finance intriguing, be sure to hit the subscribe button and offer a like, embarking with us on a journey into the future of digital currencies.
This year has been massive multiple expansion. There's been a little bit of earnings recovery, but not much. Most of it's multiple expansion and liquidity. I mean, the financial conditions since October got better, and interest rates fell 20%. I mean, a massive move over the last 10 weeks in interest rates. And animal spirits came back, and it is, I like the analogy to that period in digital, because remember, that first move, that first leg up was the $10 billion flowing into GBTC, and Michael Saylor talking about how bullish he was. And, supply-demand imbalance, not enough sellers, lots of buyers, and boom, 10 to 60. And then Elon famously does I don't know about this. I don't think it's very good. I'm selling mine. And boom. And too much leverage and unwinding. And you had a spiral down 50%. I mean, that was a quick move, 50%. And then people were like, well, nothing's changed. I mean, other than Elon, nothing's changed. And so you had the rest of the FOMO trade, and exacerbated by the Thanksgiving, where everybody's back and things are going up, and they're like, oh, pump, and then November 6th, so I guess it wasn't Thanksgiving. I guess it was just the summertime FOMO, but in November 6th, they passed the futures ETF, and it's been straight down, after that. And so I don't think there's that type of catalyst for equities, but if I look at the multiple on NASDAQ and the multiple on the S&P, they're not sustainable. If I look at the fact that all the macroeconomic indicators are heading for the hard deck, I look at a couple things. One, the weighting of technology as a percentage of the overall market. We just surpassed the all-time high in 2000. That was unsustainable. This one is too. And big tech, the Magnificent Seven, are at valuation levels that just don't make any sense. And it doesn't mean they can't go higher, but I don't think they will. I mean, personally, I think year 4 presidential cycle is pretty muted year, 3-4%. So, I think that's probably a good estimate for next year. Most people think it's going to be business usual. I always thought the estimates are always, it's going to be up 8 to 12%. Always. That's what they always say. And then, sometimes they're too bullish, sometimes they're too bearish, but they're always saying 8 to 12. The fact that we're up 20 in the third year, that's actually about average for a third year, 16 to 20. So maybe a little above average. So maybe next year has to be a little below average. So maybe it's closer to flat. That'd be my estimate. 1 year ago, I had a little mini existential crisis, right? At the end of 22, when, bad guy did bad things, I was like, whoa. Is this enough to kind of put the genie back in the bottle? That as much as I believe in the tech, because it wasn't, FTX was not a crypto problem. The crypto never failed. DeFi never failed. I mean, Dan Morehead was really vehement about that. Like, look at the data. DeFi never had a problem. And I did have a little mini existential crisis. And I say, Dara Albright's piece that she wrote on decentralization kind of snapped me back into my senses. And as painful as this year has been, I feel better for it. I feel stronger for it. And it is that which doesn't kill you makes you stronger. But I actually feel like I've been working out every day, even though I don't work out every day. But I really feel like that struggle, and that's true of life. Right? If you want to grow, you have to have pain and struggle. And societally, in the last maybe 20 years, we've shifted a little bit to, I'm going to avoid that struggle. I'm going to avoid that pain. I don't want that. I don't want to talk to someone who disagrees with me, so I'll just block them. I don't want to, look at a new idea that challenges my perception of status quo. I don't want to think about someone competing with me and trying to take my business away. So I'm just going to ignore it. And that process, I think, is what makes us better, right, as humans, because we are resilient and we are persistent and we're cognizant of the things around us when we're in that state. And I don't know. I was on a space today with a bunch of, and I mean this in a loving way, a bunch of degens. And I mean, all young people. I'm like the old grandfather. And it was a blast. And I just love what I do. I love hanging out. I did a call yesterday with these two guys who I think they're going to rebuild the lending business that never should have died in the first place. And they're awesome. They're just awesome, young, hungry, smart guys. I won't call them kids. I mean, but I mean, again, I mean that in an affectionate term. And I'm going to work with them. And I want to help them grow. And I want to be that, adult in the room to say, oh, okay, but let's, you're enthusiastic. Let me be the voice of reason. And I think we're going to build something great.
As we conclude today's conversation, let's reflect on the impactful message conveyed by Mark Yusko regarding resilience and growth, both in the broader scope of life and within the cryptocurrency realm. The preceding year posed considerable challenges, witnessing significant turbulence in the cryptosphere. However, it is precisely these challenges that serve as catalysts for innovation and fortitude. Now let's draw a parallel to the current state of the crypto market. Despite setbacks and market adjustments, the underlying principles of blockchain technology remain robust. Visionaries and entrepreneurs persist in pushing boundaries, mirroring the vigor and dedication of the youthful individuals Yusko referenced. Looking ahead, it becomes evident that the trajectory of crypto and blockchain is an ongoing narrative. It is a journey characterized by continuous learning, adaptability, and above all, resilience. Here at Unscripted Crypto, we are thrilled to be companions on this expedition with you. Thank you for being part of our audience. Don't forget to subscribe and hit the like button if you found this video enriching. Stay connected for more insights and unscripted dialogues exploring the dynamic realm of cryptocurrency.